So I know we've talked a lot about QR codes today. I promise this one does work. So throughout today's presentation, we are going to be doing a number of interactive activities, some exercises. All you need is your phone, the camera app. Take a quick scan of this QR code, and it will connect you directly to the program you'll need. Alternatively, if the QR code does not work, you can also use your phone's browser to navigate to slido.com, which you can see on the screen. And the event code to enter is right there, hashtag CCWC 2025. That will also connect you to our interactive software today. If you have any technical difficulties, you're welcome to raise your hand, and one of our team members will assist you if they can help you get connected there. So we'll give you a second to do that. Thank you.
Great. While you're doing that, I'll kind of do our introduction and talk about what we're going to talk about today. Just want to welcome everyone. We really appreciate you spending the time this afternoon with us. I know it's probably been a really busy day for everybody in this room, including ourselves. So that's what that chocolate graham cracker cookie is for. If you'd like an extra one, we've got some in the front and the back. So just let us know. So thank you for joining us for Social Security Simplified. My colleague AJ and I are honored to be here. This has sort of been a bucket list item for us to present at the Women's Conference. So we're appreciative to be here. I have to sort of brag on my teammate here, AJ. He's a bit of a Social Security expert. He's a bit of a Social Security nerd. I think we're all a little bit of financial planning nerds at the office. So we are certified financial planners. This particular topic is a subject of our studies, but we've dug into this topic even more. At our firm, we typically help people who are getting ready to retire, who are possibly already retired, also mid-career professionals, so maybe a little earlier in their career, but especially for that retiree market, this has been a very, very hot topic. So one of the reasons why we've dug in so deep to become experts in this, so that we can serve our clients and our community a little bit better. So. Like I said, we're a local, homegrown, woman-owned firm. We've been around for 35 years. We're independent, so we're not tied to any major brokerage house or bank or anything like that. We're fee-only fiduciary, so we charge fee for service as opposed to selling commissionable products. So as you guys are getting logged into this QR code, I thought that was worth mentioning. And we're really in it for the long haul with our clients. So most of our clients have been with us for a really, really long time, even going back to the founder of the firm 35 years ago. So we're really proud of that. So we sure appreciate you joining us today.
All right, it looks like just about everybody is good to go. If you didn't get on there, that's okay. There are going to be slide QR codes on the actual activity slides as well. So, Tina?
Great. I think we're good to go, yeah.
Okay.
So welcome to Social Security Simplified. Not the most entertaining topic, but one of our favorites. So here's what we're going to talk about today. We are going to talk about how Social Security works, what benefits are available to you, and how to make smart decisions, when and how to file, or at least the things you should consider when making those decisions. This can be something that you and your spouse or maybe even a parent or a grandparent. So for those folks who are in the crowd that are not necessarily close to Social Security age, this can be some helpful information to help your family members as well.
Never too early.
Never too early. So.
All right.
So the first thing we're going to do our first poll.
Yeah, let's get a temperature read of our audience today.
Absolutely.
So for those of you who did use the QR code just now, you should be able to see this on your phone, and you can put what word comes to mind when you think of Social Security. And you can put more than one word if you like. You're welcome to. So we've got, a couple things already. I see retirement is a very popular one. Old. Well, it is an old system.
I heard somebody screaming out at the booth, I've got 6 years left.
I see a few really interesting words up here. Complicated, scared, uncertainty, all very uncomfortable feelings to have when you're approaching retirement, because that is a very large transition, a major transition in life. Okay, yeah, looks like we've got a few more coming in. Entitlement, that's an interesting one. Entitlement. Stress, confusing, low funds, broke. Yeah, all very valid things to come to mind when you're thinking of Social Security. Great, okay. I'll go ahead and move on to the next activity.
Yeah.
There.
Yeah, our next poll or question is, what part of Social Security do you find most confusing? So feel free to enter your answers.
I think this one is a single answer. So just know for any activities, for any questions today, there are no wrong answers. A lot of these are also opinion-based. So I'll give you another couple seconds to vote for that. All right. Working while collecting. We got a bit of a close race here. When to start benefits clearly looks to be the most popular choice. Okay. All of these are very valid questions to have around Social Security. All things hopefully we address, and by the end of this, you'll have a little bit more certainty around some of these options. If not, I invite you to swing by our booth if you haven't already, and we can talk a little bit more. Okay.
Great.
So.
Wonderful. So I saw a few people answer, what is Social Security? So let's start there. So Social Security is a monthly income in retirement. It is a government program, and it's technically there to replace a portion of your income during retirement. It is based off of how much you've earned while you are working, and it is deducted from payroll taxes, so from your paycheck. So you'll see some of those deductions on your pay stubs as you kind of dig into those details there.
Yeah.
For many women, we live longer. We usually step away from work, maybe for childcare or caregiving. So it's really crucial, a lot of the information we're going to share today, just because in order to maximize your benefit and take the most advantage of it, we'll kind of talk about some things today to think through some of those details.
Absolutely.
So, great. Let's see here. So how do you qualify? So 40 credits to qualify. Every quarter that you work with a certain amount of income qualifies you to earn a credit. So it typically equates to about 10 years worth of a working record to be able to qualify for Social Security. So for some of you who might be working in the public sector and may have not paid into Social Security or only maybe have a few years, this is an important piece to know. So in order to qualify for benefits, you have to have those 40 credits outside of a job that maybe doesn't pay into Social Security. So something to consider there. So, right.
How do you pay into the system?
Great question.
Yeah.
So, sorry, technical issues today. So let's see.
We have touched on that a little bit.
Yeah,
so for those of you, I saw some of you nodding your head. If you've ever had the interest at looking at your own pay stub, you might see some of the deductions that come off. One of those says Social Security. And if your pay stub says that, you are currently paying into Social Security.
Yep.
Yeah. So each paycheck, you have some of your income deducted to go towards Social Security. Your employer also matches those contributions towards the Social Security system. And for those of you in the audience who maybe are self-employed, you actually do have to make up both sides of that equation. You have to make the Social Security deduction as the employee, but also the employer deduction to match that. Finally, Tina did allude to the idea that there are some careers that do not pay into the Social Security system. These typically are careers that have a separate pension. So a really common one we see here is CalSTRS. For those of you in the audience who might be teachers, you might be on the CalSTRS program where you are paying towards that pension and not making payments directly into Social Security. As a result of that, the Social Security system is not factoring in your income towards that calculation. And if you're in that position, you probably already know, you're probably well familiar with that.
And I think, yeah, that's you too.
Okay.
Yeah.
So how is your benefit calculated? Your benefit is an averaged calculation of the highest 35 years of earnings paid into the Social Security system. So that does beg the obvious question, what if I haven't worked 35 years paying into Social Security? Well then, for those years that you have not, the gap between what you have worked and 35, those years are factored in as zeros. That does, as you might expect, bring that calculation down. So Social Security is based on how many years you've worked, how many years you've paid into the system, and how much you've paid into the system over time. Higher earnings, more years paid in, again, equates to a larger benefit.
Keep going.
Okay. So for the current tax year, the average Social Security benefit is $2,000. It can be more than that. Some people receive less than that, but for the most part, the average Social Security benefit for the retiree taking benefits today, $2,000. For those of you who have never gone to the Social Security website, highly recommend. If there's one thing you take away from our discussion today, go to the ssa.gov website. Make an account. If you haven't already, make an account. And on that website, you can actually obtain a earnings history for your entire career. And it's very important you look at this from time to time because they might get it wrong. And if nobody speaks up about it, if you don't advocate for yourself that, hey, my earnings record doesn't match what you have on the website, they're not going to correct it for you. So you have to make sure you're paying attention, contact Social Security, make sure that does get corrected. It's not very often that they get that wrong, but it's been known to happen. So Social Security is a very big system.
Yeah, I was just going to add too, when you go to the Social Security website and try to set up a login, they're going to ask you some really weird questions. They're going to ask you about like car loans or mortgages or where you used to live when you were 5 years old. I mean, the questions are just so obscure. So take your time with it. If you do get locked out, you can always call or go into the administration's office and get some help. But yeah, just make sure you kind of take some time with it and you do it a little bit earlier in the day when we're all kind of fresh and brains are working.
There you go.
So.
Absolutely. All right. And again, so yeah, definitely check the website. Any takeaways from today, make an account. Check your earnings. All right.
Awesome. So I alluded to this a little earlier, but why does this matter? Of course, again, sometimes as women, we step away from work, caregiving. I have 2 little ones at home. My husband is actually one that stepped away from work. So roles kind of changed a little bit there, but we're living longer. Women are living longer. We usually outlive our male spouse if we have one. It's just a lot of real life factors that sort of factor into this. So yeah, and I'll also add to obviously kind of the gender pay gap as well. So being able to be knowledgeable about this subject, understand what your options are, educate yourself, work with a trusted, financial advisor and or, respective resources can really help you make the most of this and maximize your benefits for your lifetime. So.
Absolutely.
I think we have another poll, but go ahead.
Yeah, as professionals who often find ourselves with the privilege of accompanying women on this journey and how to approach filing for Social Security, there are so many barriers to, what do I need to consider? How do I even start the application process? What items of information do I need to bring with me if I make an appointment? It can be very confusing. So I do encourage all of you, as we move into our next activity, on the Slido app on your phone, you actually do have the ability to provide your name and email address following. I probably should have mentioned that maybe at the top, but if you provide your name and email, we will be sending the summary slide deck that we reviewed today, so you will get a copy of that, as well as some additional resources around how to approach the Social Security decision. So you can do that on the phone. In the top right corner, you'll see kind of that account symbol, and through that, you can add your phone and email. There are also some helpful links in the top left menu bar. That's 3 lines on the phone. You'll be able to see that there too. That will link you directly to our website, as well as to the link directly to, if you wanted to schedule a conversation with our office, you can use that link as well.
Yeah.
So,
Yeah, I was just going to add too, if you're an old-fashioned paper pencil person like me, feel free to write down your contact information as well, and we can collect that at the very end as well. So yeah, sometimes technology doesn't work like we've learned today. So always happy to take that information down, hard copy. So yep.
And one more interruption as well. On the top of the screen, you should see two tabs, one that says the poll, the activity, but there's also a Q&A tab. You are invited to add questions throughout the presentation. At the end of our presentation, all of those questions will be placed on the screen, and we'll be doing some Q&A. So you are more than welcome to do so.
So I see that some of you already started asking or answering the question. So sounds like we've got the hang of this. So yeah, which of these situations best match your work or family experience? So it looks like we've got a high degree of response with I've worked full-time most of my life. Yay.
Oh yeah. Oh yeah. Very good. Okay.
How many in the audience, just to raise their hands, are self-employed? Just out of curiosity. Okay, a few hands. Okay. Do the taxes always feel a little higher? Yeah.
Frustrating.
Yeah. That's the Social Security piece of it. Absolutely.
Yeah.
So,
Okay. Looks like we have a clear winner on this slide as well. So
great.
Let's keep moving. So we're going to now go over the different types of Social Security you may be eligible for. So depending on your work history, depending on your marital status, depending on the length of your career, the patterns of your career, there are a number of different types of benefits you might be eligible for. And we have them up on the screen here. So the first one we're going to talk about are your personal retirement benefits. These are the benefits based on your own work record. If you file for benefits on your own record, you are filing based on the calculation of income you have paid through Social Security taxes. We've already talked a little bit about how that works. You do need 40 credits to qualify, equivalent to roughly 10 years. That's 4 credits per year, 1 credit per quarter. You do need to, the benefit is based on the highest 35 years of your earnings. So if you have 35 years paid into the system, you have 35 numbers added to that calculation. If you have worked less than 35 years, then some of those 35 slots are zeros instead. So your personal retirement benefit, you are eligible for that as early as age 62. Age 62 is the earliest that you can file for your own benefit. I'm going to say a few things multiple times just because those are the things that I want to make sure you come away with. You can delay filing the benefit. In fact, it might be in your favor. Some of you might even be aware of what your own full retirement age is. That is a moving target that Social Security assigns you based on your birth date. That's right. It is moving. In fact, it used to be 66 until just a few years ago. Now it's a few degrees higher than that.
Right.
It's now at 67. That's right. The benefit is monthly, and it is guaranteed for life. And for that reason, it is a fairly large decision on when you choose to file, because if you file earlier, you are locking in a smaller monthly amount. If you choose to file later, you receive a larger monthly amount, but you forego that first few years of income, right? Yeah. Now, you can suspend it. Yeah, meaning you can file for the benefit and say, actually, let's pause that. And you can stop the benefit, and then you will receive the delayed accumulated credits from not receiving monthly income. So, but that is a great point. Thank you. The only adjustment then is for cost of living. Annually, Social Security does receive cost of living adjustments. Those are generally reported in the news. You'll see something like Social Security is getting 2.8% cost of living adjustment this year. That means across the board, everyone's monthly income increases by that 2.8%. Okay?
AJ, I was just going to add too,
Yeah.
so this was sort of a personal situation that came up. Actually, my dad, he filed at 62 and then continued to work part-time on a part-time basis. So on his record, his Social Security benefit actually increased as he continued. Now he's in his mid-70s now, but that's also something that affects your own work record too, is if you do continue to work beyond your filing age as well, your benefits can't go up. So
yes.
And it's limited amount of work though, right, that you can do during that time?
Correct. We will talk about that. There
Yeah.
are some limitations around that, absolutely.
Yeah.
But yes, you are correct.
Yeah.
Correct.
Yeah.
Correct, yeah.
I will say this in the interest of time, because it is impossible to cover everything about Social Security in 1 hour. And we started a few minutes late. So I am going to try to pick up the pace going through these slides. But if there's any questions you have that were not answered today, please do reach out, because our mission here is to make sure that people who want to seek the answers get the answers that they're looking for. Okay? So if we don't touch on that as in-depth as you'd like, see our booth or put your contact info in the app and we'll reach out. Okay? The next benefit is spousal benefits. You are eligible for benefits on a spouse who has earned income while paying into Social Security. The amount that you can receive through spousal benefits is equivalent to up to 50%, so up to half of your spouse's income. Now, this is a historical holdover from a time when, decades past, you would see one spouse working, one spouse maybe being the homemaker. This was to ensure that that spouse was still provided for with some income, and they would receive up to half, even if they had never paid into Social Security at all. Spousal benefits, as you might imagine, they're available if you are married and your spouse has effectively filed for benefits. I'll say that a different way. Your spouse needs to file for benefits first in order for you to be eligible to then get the spousal benefit on their record. So that used to be true. There used to be a strategy where you could do it. You can't do it anymore. Can't do it anymore, unfortunately, because that took away a dimension of strategy that you could kind of get the most out of the system.
I'm talking about ex-spouse though.
Oh yeah, we'll touch on that. Okay. Again, you don't need to have worked or paid into Social Security at all to receive a spousal benefit. And the last item here is important to know. If you, like 88% of you said in the room that you have worked full-time your entire career, meaning you are eligible for your own benefit, some of you may also be eligible for a spousal benefit. What that means is when you file for benefits through Social Security, you are deemed as filing for every benefit you are eligible for. That doesn't mean you receive all of them. You're not allowed to double up. Social Security will give you whichever is higher. So when you fill out an application, you will provide the info about your marital status. Sometimes they'll ask for a marriage certificate, but they'll also have your work history. They'll activate both benefits, and they'll give you whichever one is higher. And finally, there is no increase for delaying past your full retirement age. We're going to talk in a little bit about how benefits increase by delaying filing for them. Spousal benefits stop accumulating delayed credits at your full retirement age, so somewhere between 66 and 67. The next benefit, ex-spousal benefits. Somebody, you're a little bit ahead of me. So, ex-spousal benefits you are eligible for on a former spouse, assuming you have been married for at least 10 years. Social Security is going to ask for a number of items from you. Marriage certificate. What city were you married in? What's their name? Have they changed their name? They'll ask for decrees of divorce. They want to make sure they're going to track everything. And if you've been married at least 10 years before divorcing, you are eligible for ex-spousal benefits. Just like spousal benefits, they equate to about half of the benefit eligible by the former spouse. You must have been married for at least 10 years. You must be currently unmarried.
I thought it was unless you're over 62.
We will get to that. Don't worry.
You're jumping ahead.
Have you been to this talk before?
I've done a little research.
That's okay. That's okay. Your ex must be eligible, meaning they must have worked and paid into Social Security, because they have to have a benefit that you can calculate in order to get half of that, right? However, the difference between ex-spousal benefits and current spousal benefits is that they don't need to have filed. They don't even have to know you're filing. It doesn't interact with their filing at all. They don't get notified. Their benefit doesn't get reduced. I get that question very commonly. Am I going to have to talk to him? Am I going to have to notify him? No. Even Social Security won't notify him. So hypothetically, if you have been, let's say he's been divorced 3 times, you might have 3 different people getting. Exactly. You can. Yeah, it happens. Yeah. It does, but that does happen. Yeah.
Yep.
So, again, when you file for the benefit, you are effectively filing for all benefits at once that you are eligible for, and they will give you the highest one. They won't double up, they'll give you the highest one. The last benefit, survivor benefits. Sometimes you'll hear them called widow benefits. These are benefits that you receive on a spouse who has passed away. The difference, this is the most unique of the benefits, is because you are eligible for up to 100% of what the deceased spouse would be eligible for. So if they were already receiving income and then they pass away, you can receive 100% of what they were receiving. If they have not yet filed and then they pass away, then you are effectively eligible for the amount that they would have received if they were above full retirement age, or their full retirement age amount if they died younger than that. That is fairly complicated. You're not going to be quizzed on it. But if I talk about anything, we won't be able to go as in-depth on all these scenarios, but you're welcome to come see us after. So you are eligible for benefits as early as age 60. However, they will be significantly reduced from your full retirement age benefit. So the way they factor that is you are eligible for 100% of the benefit reduced by the years you claim early. If you remarry before age 60, you lose eligibility for the benefits on your deceased spouse's record. However, if you marry after age 60, you can still get those benefits. I don't know why they did it that way. Not sure why the threshold was set at that point, but that's how they did it. You can switch. This is the most important piece for this slide. You can switch between survivor benefits and your own personal benefit. Important, again, for everyone in the room who has worked full-time their entire careers. If you have a deceased spouse, you are eligible for their survivor benefit. You can take it as early as age 60 and allow your personal benefit to continue to accumulate and grow delayed credits. You don't have to activate. This is the only benefit. Earlier when I said you are applying for every benefit you're eligible for, this is the only one that doesn't count in that equation. So you can file for survivor benefits, delay your own until age 70 to get the highest benefit possible. That is an absolutely valid strategy.
I like that one better than the divorce X one.
Yeah, a little bit.
For many reasons.
Yeah. Finally, again, this does apply to widows, widowers. This also applies to divorced spouses. If your divorced spouse dies, you can also receive survivor benefits. Again, you must have been married at least 10 years. So, in order to summarize, you're welcome to take a photo of our summary here. Again, this will be on the slide deck that we send out, but this highlights each benefit type, who qualifies for each benefit, when you can start, how much you can get, and some special considerations. I'll pause for a moment to allow you to take a photo. But again, give me your email. I'll send it to you. Okay, we're gonna move on. So, once again, I'm gonna ask you to take your phones out. For those of you who just took a photo, you already have it in your hand. We're gonna do another activity here.
Good.
Oh.
All right. Next poll. Which of these do you think has the biggest impact on your Social Security benefit amount?
It's all
Curious to
relative,
see.
right? Which of these has the most impact? There's no wrong answer here. Everyone's situation is a little different.
While you're answering that, I was going to circle back to the ex-spousal benefits, since that seems to be a particularly popular topic.
Probably not anywhere else.
Yeah, in a recent situation with a client, so she was a longtime teacher, so she's receiving a pension in which she didn't receive Social Security benefits because of the laws that were just changed in January. So what happened was, since those law changes, she came into our office, we let her know about the law changes, and she was able to retroactively file for ex-spousal benefits based off of her spouse's record, retroactive for about 6 months, I think, received a lump sum, and now she's receiving a monthly Social Security check. So it's things like that that I think I think a lot of women tend to overlook this ex-spousal benefit that tends to be a little bit of a shocker for them.
She was a teacher. What happens if your ex is in law enforcement and they don't pay into?
That's a great question. So she probably wouldn't have been able to receive a pension, or I'm sorry, a Social Security benefit if he didn't pay into the system. That is correct. Yeah. So obviously circumstances are different for everybody, but yeah, I mean, what a game changer for her.
I promise we're going to leave time at the end for Q&A. We're hitting the 45-minute mark here. So we are going to breeze through a couple of these. I think there's, so how much you've earned over your career, that's a great one. This is, again, there's no wrong answer. They all do have an impact. If you had to choose today, when would you file? Again, there's no wrong answer. What's best for you might be different from the person sitting next to you, but just to get another temperature read of the room.
Absolutely.
If you had to pick today, when would you file?
Ooh, early as possible.
Yeah.
Totally understand.
Okay. Oh, well, this is a lot more even than I expected.
That's understandable. Understandable.
Wow.
I have lots of clients who come in and say, I'm filing the first day I can when I turn 62.
Yeah.
So we get it.
Yeah. There's nothing wrong with it.
Yeah.
Yeah.
Yeah, absolutely.
Okay. Yeah, it looks like just about half. It looks like just about half of you answered age 62. Yeah, so as early as possible. Okay. And there might be a lot of different reasons for that. Some of you might be just wanting the income earlier. There's also the idea of maybe it won't be around if I file for it later. Maybe I should just file as soon as possible before it disappears. We'll address that, but that's a totally valid thought. Yeah.
Great.
Okay. It's good to know where we're at.
Go for it, AJ.
So we've talked on and off about how delaying or filing early does have an impact on the benefit. So in 2025, the average benefit was $2,000 per month. So that's the example we're going to use. At the full retirement age in the center, you would receive 100% of that amount. So let's call it $2,000. Okay? $2,000, 100%. Again, age 66 or 67, or some variance, some degree in between, depending on your date of birth. If you file earlier than that, the benefit is reduced. You can file as early as age 62 for your own personal benefits, but the amount of the reduction can be seen here, and this is based on an age 67 full retirement age, so 5 years early leads to a reduction of 70%. You're receiving 70% of what you could have received at 67. Your $2,000 suddenly is only $1,400 per month. But you have the benefit of receiving 5 years of income now before that full retirement age benefit would have ever kicked in. And there could be reasons for doing either. Finally, if you delay beyond your full retirement age of 67, at age 70, this is the latest that you should really reasonably file because you don't accumulate credits beyond that. For every year beyond full retirement age that you do not file, you receive an 8% increase. 8%. So if your full retirement age is 67 and you wait 3 years, you can receive up to 124% of your benefit. From a $2,000 benefit, that leaves you with just under $2,500 per month. If your full retirement age is 66, that's an extra 8%. Instead of a 124%, it would be 132. So there might be reasons to delay filing as well. It's more complicated than just what number is the biggest. It's what makes the most sense for your situation. And again, what's right for one person, what's right for you might be different for the person sitting next to you. So there isn't any subjectively wrong answer. So what things should you think about before filing? How long do you expect to live? Whether or not you need the income now, whether there might be some strategic opportunities that you can use. Your Social Security is just one aspect of your retirement. Maybe you have retirement accounts. Maybe you have 401ks or IRAs. How does taking Social Security now interact with my taxable income when I'm drawing from my investments? It's a good question. And there is an interaction there. So you do want to weigh that, you factor that into your decision. Coordinating with a spouse's benefit strategy. That's huge because we just talked about spousal benefits. We just talked about how one spouse can activate their benefit in order to allow another spouse to file spousal benefits. But does that make sense? And if so, maybe we both worked full-time. Do I get the spousal benefit and she files her benefit, or vice versa? There's a lot of different ways you can slice the pie. Lastly, whether you're still working. And again, I wish we can get into all of these in a lot of depth, but I'm gonna kind of speed run through these since we're getting close to the clock. How long do you expect to live? If you have a history of family longevity, if mom lived to 100, grandma, your aunt, your sister, they all live to ripe old age, you are more likely to have a longer life expectancy. And that means you are more likely then to rely on Social Security for longer, which can then beg the question, maybe I should wait to file so that I am guaranteed a higher benefit that will last me for as long as possible. That's absolutely an important factor in the equation. If on the flip side, you don't have a history of family longevity, maybe it makes sense to file earlier. Take advantage of the income now in your healthiest years, or for as long as you can, right? So and only you know that about yourself and your family history, but that is an important piece. Do you need the income now? If you're still working and you're 62, you probably don't need to file for benefits right away. In fact, there is an interaction between Social Security benefits and earned income if you are before full retirement age. I think somebody back there asked a question about it. There is an offset between what you earn, and there is a threshold. Every year that threshold changes. I think this year it's somewhere in the neighborhood of $19,000 to $20,000. If you reach out to me after, I'll give you the exact number. But for every $2 above that threshold you earn in a year that you have not yet achieved full retirement age and that you are earning above that threshold, for $2 of that income, you are withheld $1 of Social Security. Meaning if your income is sufficient, you might just wipe out the entire benefit completely, which means maybe it doesn't make sense to file before full retirement age. Now, I should say if you do, it's not the end of the world. That money is not just taken away. It's paid back to you when you get to full retirement age. It's refactored into your calculation. It's as if you never filed at all. Yeah. How does it fit into the bigger strategic plan? I mentioned some ideas before. Some of you might already have an advisor. Maybe they've talked to you about things like required distributions. Maybe they've talked about things like Roth conversions. A lot of these are taxable events, and those taxable events increase your income. And as your income increases, the taxation on Social Security can increase. That can lead to things like paying higher premiums on Medicare. That can lead to getting into some net investment income tax windows. So it can have an effect on your big picture. Again, everyone's situation is different, but we would love to have a deeper conversation with you following our presentation today. Coordinating with the spouse's benefit strategy. If there is a large age gap between you and your spouse, if your spouse is 10 years older than you, that just exacerbates this idea that there is a longevity gap between men and women. Women are highly more likely to outlive their male spouses, and if the male spouse is significantly older, that just gets even more likely. And as a result, it might make sense for a younger spouse to file early while an older spouse files as late as possible. Why? If an older spouse passes away while having delayed their benefit as long as possible, they are guaranteeing the younger spouse as high of a survivor benefit as possible. So that there are ways, if you're exactly the same age, maybe your birthday is on the same day. I don't know. There are different strategies depending on that interaction. Whether you're still working, we sort of touched on this as well. If you are pre-retirement age and you are still working, probably doesn't make the most sense to file. However, if you are beyond full retirement age, if you're 66, 67 or older, you can earn as much as you want. You can file for benefits, continue to earn an income. They're not going to offset that at all. They will just let you take the benefit and continue to work. So all very important factors in the decision for when to file, for how to file, for which spousal benefit or personal benefit to take. So here are the factors. Here's some questions to ask. I'm not going to read all of these, but you're welcome to take a photo. I'll pause for a second. For the astute observer in the audience, you might already expect, but with your phones in your hand, we're going to do another activity right after this. Okay.
Yeah.
Good?
Yeah.
We're good? Okay. Phone's out. It's your turn.
Yeah.
Let's hear what you think. From your perspective, most important to least, or maybe most relevant to least relevant. And this can be personal to you. Everyone's situation is different. Which of these might affect your decision? Yeah. You want to do Crowder? Yeah. Myths. Okay.
Yeah.
So, looks like income needs. That makes the most sense. That's the most intrinsically tied to our sense of well-being. That makes a lot of sense. It's completely rational. Income needs. If I need the income now, I'll file for benefits now. Sure. Work status, yeah. Taxes, Medicare. That surprises me, actually. That's usually the last thing people think of. So good for you. You're thinking ahead. Okay. Again, no wrong answers, but it's nice to see and compare what people think of. All right. So in the interest of time, we're going to hit some of these very quickly.
Perfect.
Tina is going to talk about
Yeah.
very popular myths associated with Social Security. We're going to dispel that, and then we're going to go into some crowd work.
Yeah.
So,
I need some volunteers in just a little bit.
The first myth.
So how many of you, just by a show of hands, think Social Security is going to disappear?
That's okay.
The answers to all of our questions are always it depends. So
Yeah.
no one's ever wrong.
Absolutely.
What do you think,
it's,
AJ?
It's a popular myth for a reason. The
Yeah.
Social Security funding, the trust fund, is in some jeopardy. Based on current projections, by the year 2033, assuming nothing changes in tax policy and how we take income tax, assuming nothing changes, Social Security is projected to be able to supply 76%. If nothing changes, in order to sustain Social Security, everyone's Social Security benefit would be cut to 76% of what they might currently be receiving. Now,
You asked the question, eventually it will be gone, not in our lifetime. But
well, that's a good point. You caught me on semantics. I'm sorry. I apologize.
fair.
If nothing is done, it's possible. Yeah, it's absolutely possible because there is an equation. How many people are in the workforce? How many people are paying Social Security taxes? And how many people are getting payouts from Social Security? And if there's an imbalance generationally, it could be an issue. I mean, we're talking years and years down the line, but absolutely.
Yeah.
Yeah.
Absolutely. So we kind of talked a little bit about this one, but picking up part-time work after retiring may reduce your benefits. So I think we sort of dispelled this a little bit.
Yeah. So any work you do can only help you. If you recall, your benefit is calculated based on your highest 35 years of income. So if you decide to go back to work part-time in retirement, that income you receive part-time will only replace a lower income year. If those happen to be zero income years because you didn't work 35 years, well, then you're replacing a zero with some income. That's going to increase your benefit. If you already did work 35 years and you were paying into the system the whole time, that part-time income is probably not going to replace anything because it won't be higher than your career.
So if you make more in the beginning and less at the end, that won't matter.
The sequence doesn't matter. The highest 35 years. Now, everything it depends. They will factor in inflation. So if your higher income years were further back, then that actually will have a bigger effect. But yes. Okay.
I can't get benefits if I never worked.
Who was paying attention
Yeah, I
earlier?
was just going to ask that.
Is this one true? No?
Oh,
No,
good.
absolutely not.
Good.
You don't have to have worked. You can still get a spousal benefit. Absolutely.
I have to file for Social Security as soon as I stop working. This is a common myth.
Yeah. We also covered this too. We covered the idea that you could file early and you can also file late. That does mean there is a choice. You have an option, and that means you are not required to file for benefits as soon as you retire. So, lastly,
If I have a pension from a job that didn't pay into Social Security, I won't get any benefits or they'll be taken away. So this is a big, big change
Yeah.
from earlier this year.
Somebody mentioned it earlier. Popular system is CalSTRS. That's the one we see very frequently. This was true up until January of this year, January 2025. The Social Security Fairness Act did repeal the two provisions that offset your public pension from the Social Security system. So Tina provided an example earlier of someone who had worked in the CalSTRS system, whose husband had worked private sector, he had passed away, and his Social Security benefit was a loss of income to the household. Well, now she is eligible for a survivor benefit without receiving an offset from her pension, which prior to the Social Security Fairness Act was not even a possibility.
41 years later, I just got it.
Woo!
Yay.
Congratulations.
Yay.
Yeah,
Years.
Yeah.
it's a long time coming.
Yeah.
Now,
Yeah.
Um,
a lot of our teacher clients. Yeah.
Yeah.
Same thing.
I did have some example cases to run through, but I feel more important is maybe getting to some questions
Perfect.
for the audience. So what I'm going to do is Tina is going to have the mic. If anybody has any questions, we will put them up on the screen for Q&A, but we could also do verbal as well. That might be a little bit more engaging. So let's jump to that. So while some of you have hands up, I'll address the most popular question.
Okay.
I lack knowledge about Social Security. I'd like to know, oh yeah, great. That's beautiful. Come see me after. Give us your contact info. We'd love to connect.
You had your hand raised? Yeah.
We did cover that with the pension. How will it affect my
Okay.
pension?
What's your question?
For the most part, it won't.
I've been on
It
pension
used to.
for years, but I have
It doesn't anymore.
for 40 years.
Mhm.
What is the retirement age?
How does
Between
that
66 and 67.
Pension
I think
for
the
10
cutoff
years
is
and Social Security for
1957,
40 years?
if I'm not mistaken. I may have that wrong, but you're welcome to
30
come
years?
see me and I
10
can
and
have
30.
the correct answer for you. But it is between 66 and 67. Yes?
Let's say I worked and I'm ready to retire, and I'm retired and I'm applying for benefits, and I decide to live in another country, and I still receive the benefits.
Great
Ooh,
question.
great
And the answer is yes. I'll give you an example. I have a client. So thank you. The question is, if I paid into the system, file for benefits, start receiving benefits, and then move to a different country, can I still receive benefits? The answer is yes. I have a client who lives in Brazil, and she has an American bank account, and she's able to access it, and she gets direct deposit,
Yeah.
and she is able to do so, even while living in Brazil, being a resident, and not having any U.S. real estate or anything like that. Yeah, great question.
We had a question from the audience. 10 years within a pension system, followed by 30 years in the private sector. Is that a correct paraphrasing of the question? 30 years putting
Yeah.
into Social Security. So how do those two things interact?
Absolutely. So
Yeah.
again, the public pension, you were not paying into Social Security, you were paying into the pension. In some cases, there are some government workers who pay into a public pension, but also into Social Security at the same time. The factor is whether or not you paid into it at all. And if you work for 30 years beyond your public employment, you are paying into Social Security. In the first 10 years, if you didn't pay into it at all, then you have 30 years factored in and 5 years of zero income. I have, this is sort of a different scenario, but it's worth sharing. I had a client who was 2 credits shy. They had 38 credits worked, 2 credits shy of being eligible for any benefit at all. And we realized that by going to the SSA.gov website, looking at their earnings history, and we realized, hey, if you get a job for 6 months, he became a Walmart greeter.
Exactly.
Yeah.
And he was eligible for benefits, and all of a sudden he was getting $300, $400, $500 a month. That's a big difference, right? So check your earnings history. It really matters. If you're really close,
Okay.
yeah, it matters.
I think we're at time.
are we-
Oh,
Oh yeah,
Oh,
please,
please,
in the
yeah.
back.
When we go to the SSA.gov and create the account,
Yes.
we can pull our history, but that doesn't necessarily take the place of filing. We just
that is correct.
Correct.
file,
Yes.
go to a different menu option.
Right.
So
Oh yeah.
information more than anything.
You
yeah.
can think of it like a soft credit pull versus a hard credit pull. Yeah. You're not activating anything. You're just getting the statement, getting a projected amount of your benefit, as well as your earnings history.
Absolutely. Any other questions from the crowd? We'll kind of go back to our.
They used to mail statements. They used to send them. They don't do it anymore. Or if they do, it's very infrequently.
Question back there.
Stipulation on like the first year of retirement, you can only work so much, earn so much, right?
Yeah, yeah.
After that, it's a different.
Absolutely. And it's so I mentioned a threshold, pre-retirement age. If you're working, you can earn about 18 to 20,000 before that $2-for-$1 offset between your income and your Social Security. In the year you turn full retirement age, that threshold is higher. It's about $46,000. And every $3 above that amount, you have $1 withheld. But again, it's not gone. Social Security pays those dollars back to you once you hit full retirement age.
No.
Any other questions?
We can go back to the, yeah,
Sure.
please.
Okay, I got a lump sum, scared to death.
Mhm.
Taxes are gonna come up. They didn't take out any taxes.
So this is my favorite subject to talk about is taxes. So what we typically recommend is you talk to your accountant or tax preparer about what you have received and do it as soon as possible. What can happen is if you don't basically report it or try to resolve potentially prepayment of taxes, you could be paying underpayment penalties headed into filing your 2025 tax return. So our recommendation would be to contact your accountant or tax preparer as soon as possible. Let them know how much you received. Obviously, didn't withhold any taxes. They can provide some recommendations on what to potentially pay federal and state taxes ahead of 12/31. And what I'll say too is that it's typically on taxes, the goal is to break even, right? You don't want to owe too much. You don't want to get a large refund, although large refunds are really great to get. But
They feel good.
now you've lent the government money for 0% for a period of time.
Yeah.
So there's that. However, you do help avoid this idea of underpayment penalties. So those underpayment penalties that you would pay otherwise, you can't get that money back. If you overpay your taxes for this lump sum that you received, you'll eventually get that money back. So we rather have folks pay ahead of time, hypothetically maybe pay a little bit extra, but then potentially get that back in a refund. So.
Yeah. All right. Well, we're just about at time. I want to thank everybody for coming today. Thank you.
Thank you all.
I welcome you to reach out. If you didn't, there were some questions up here that are great questions I wasn't able to get to. Please give us your contact info. You're also welcome to send the question in the app or come see us at the booth. I'd love to make sure your questions are answered.
For those of you who attended this session today, we're going to be creating and emailing an exclusive link with not only copies of the slides, but additional resources, checklists, information over the next 12 months regarding this topic and maybe related topics. So please definitely provide us your contact information.
Yes.
We definitely want to keep you informed and
Yeah.
continue to educate you on this topic.
There is a QR code up on the screen. This will bring you to our link tree where we have links to schedule a meeting, to go to our website. We also have links on the link tree for all of our social media platforms, which our team have so graciously put together. So you can follow us on social media. We do post tips. Sometimes it's seasonal, it's themed, depending on what season we're in. But feel free to follow us. We're on all of these that are listed on the screen here. We'd love to connect. Thank you.
Thank you.
Thank you.
Thank you all.